The Unified Payments Interface (UPI) has revolutionized the way transactions are conducted in India, offering a seamless and efficient mode of payment. With the increasing adoption of digital payments, the National Payment Corporation of India (NPCI) has introduced several updates to UPI transaction limits in 2024, ensuring that the system remains robust, secure, and user-friendly. Hi, I'm your host Ria, and in today's video we will explore the latest updates to UPI transaction limits and their implications for the users and merchants. But before that, make sure you have subscribed to our channel Freedom Money English and download the Freedom app. Let's have an overview of UPI transaction limits. As of June 2024, UPI transaction limits have been raised to cater to various types of transactions. The NPCI has set a standard daily transaction limit for normal UPI transaction at 1 lakh per day. Additionally, users are allowed of a maximum of 20 transactions per day. These limits can vary between banks, with some setting lower daily limits ranging from 25,000 to 1 lakh rupees. For specific types of transactions, such as those related to capital markets, collections, insurance, and foreign inward remittance, the daily limit has been increased to 2 lakh rupees. Furthermore, transactions involving payments to educational institutions and healthcare providers can go up to 5 lakh per day, provided these entities are verified merchants. Similarly, for initial public offerings, IPOs, and retail direct schemes, the UPI limit per transaction or per day is also set at 5 lakh rupees. Facilitation of offline transaction. The increase in the UPI Lite transaction limit supports the use of UPI in areas with limited internet connectivity. These enhancements make UPI more accessible, allowing for the greater adoption in rural and remote regions where internet access can be unreliable. It ensures that digital payments are not confined to urban areas, thus broadening the scope of UPI. These adjustments reflect the NPCI's efforts to accommodate higher value transactions while maintaining security and efficiency in the UPI system. Now let's talk about the important updates. One of the significant updates in 2024 is the introduction of interchange fees on certain UPI transactions. An interchange fee is a transaction fee that merchants must pay when customers use UPI through prepaid payment instruments, or in short, PPIs, such as wallets, for example, Google Pay, Phone Pay, Amazon Pay. This fee varies based on the type of transaction. For instance, fuel for 0.5%, for post office, telecom, utilities, agriculture, and education, it is set at 0.7%, supermarket is set at 0.9%, insurance, mutual funds, and railways are set at 1.1%. These fees are intended to cover the cost associated with the processing, accepting, and authorizing UPI transaction. However, it is crucial to note that the customers are not required to pay these interchange fee for P2P, which is peer-to-peer, and P2M, which is peer-to-merchant transaction made through the prepaid payment instruments. The burden of these fees falls on the merchants and is primarily applicable to transactions exceeding the amount of 2,000 rupees. Now let's understand what will be the implication of these on the merchants and customers. For merchants, especially small and medium-sized ones, must account for these additional costs in their operations, while small merchants are exempt from these fees. Medium-sized merchants only pay interchange fee for transaction above rupees 2,000. For high-value transaction, merchants have the flexibility to either absorb the increased cost or pass it on to the customers, which may influence the pricing strategies. On the customer side, the impact is minimal as they do not directly pay the interchange fees. This ensures that UPI remains an attractive and cost-effective option for the digital payments. Customers can continue to make UPI payments for personal transactions without incurring additional charges, promoting wider adoption of digital payment methods. Now let's understand what is prepaid payment instrument in UPI. prepaid payment instrument. In short, PPIs plays a significant role in the UPI ecosystem. These digital wallets, including PhonePe, Paytm, Amazon Pay, and others, offer users a convenient way to store money and conduct a real-time transactions. The NPCI has also introduced a wallet loading service charge for PPI users. PPI users are now required to pay 15 basis point or 0.15% as the service charge to the remitter banks when recharging wallets with the amount exceeding 2,000 rupees. For instance, if a user top up their Amazon wallet with more than 2,000 rupees, Amazon will pay 0.15% service charge to the user's bank. This charge ensures that digital wallet service remains sustainable and secure without imposing additional cost on the users. Now let's talk about UPI transaction limits across different platforms and bank. Different UPI platforms and banks have set varying transaction limits to cater to their customers' need. For example, very popular UPI apps like Google Pay, PhonePe, Paytm and Amazon Pay have a daily transaction limit of 1 lakh rupee. The new customers on the Amazon Pay UPI are restricted to transaction of up to rupees 5,000 for the first 24 hours. Bank also have individual UPI transaction limits which may differ based on the type of UPI transaction. Here are some examples. State Bank of India has set the limit at 1 lakh per day, whereas Punjab National Bank has set the limit at 50,000 per day. IDFC First Bank has set 1 lakh per day, wherein Allahabad Bank has also set it for 1 lakh per day. Bank of India has set the limit at 1 lakh per day with a transaction limit of 10,000. These limits are subject to change and may vary based on the bank policies and the type of UPI transactions such as peer-to-peer or merchant payments. Addressing the volume cap for third-party app providers. Now let's talk about addressing the volume cap for the third-party app provider. To prevent monopolies in the UPI market, the NPCI has proposed a 30% volume cap on all UPI apps. This cap aims to ensure a competitive and a balanced market, fostering innovation and preventing any single app from dominating the UPI ecosystem. However, the deadline for implementing this volume cap has been extended to December 31st, 2024, providing third-party app providers, that is TPAPs, more time to comply with the regulation. Well, in conclusion, it would be right to say that the updates in UPI transaction limits and the introduction of interchange fees in 2024 reflect the RBI and the NPCI's commitment to enhancing the UPI system's efficiency, security, and user experience by accommodating higher value transactions and ensuring that costs are managed effectively within the ecosystem. These updates are set to promote wider adoption and usage of UPI. As digital payments continues to grow, these measures will help maintain a robust and secure digital payment infrastructure, benefiting both users and merchants. The focus on security and convenience ensures that UPI remains a robust and a reliable platform for digital payment in India. That's all in today's video. Hope you enjoyed this video, and for more such financial updates, make sure you follow Freedom Money English channel. This is your host Riya. We'll see you in the next video. Take care. Bye-bye.